Mr. Rogers started his sharing with this statement: "If you print a lot of money, your currency will eventually become worthless throughout history." According to Mr. Rogers, there are apparent explanations for this, and when currencies decline, something must rise in its place. Typically, real assets do this. Mr. Rogers predicts that as a result, genuine items will cost more than they have in the past, but once again, supply and demand factors must also be taken into account. However, if you print a lot of money, its value would decline and something else's value will rise in relation to it. Like the price of sugar, for instance. China is still in debt. China had a large amount of cash set aside in 2008 for emergencies. They started spending the money as soon as it started to pour, saving the planet and now even China, which is about to declare bankruptcy. It's on the way. The next bear market will be a nightmare since it is already taking place. Do you consider this to be significant observation? Or perhaps all that is being done is staring out the window? Mr. Rogers' answer, which is a straightforward statement, is to look out of the window. The largest debtor nation in the world is the United States. It doesn't matter who quits buying our treasures. We need to understand that we got a problem. We have a problem even if people continue to buy our stuff. He implies that it is a good time to grow elderly because people are reaping the rewards of buying valuables. Mr. Rogers is discussing that he received 2 teenage children and he notices that the troubles these are going to inherit in the elder generation are quite not good. Everybody is doing the same thing now. Everybody is printing money as fast as they can. Nobody is printing money as rapidly as the United States and the Japanese. For instance, in China, they still have interest rates. Not fantastic interest rates, but they're still decent interest rates. Japan, America, and several German countries no longer have interest rates. Some countries have done a less awful job than others. Mr. Rogers is looking because he knows enough history. Part of that is knowing somebody's going to come out of this in better shape compared to others who are going to come out in worse shape. The key, as per Mr. Rogers, is to determine who, and he doesn't have a specific answer for that, but he does know that China is doing a less awful job than Japan, for example. But he knew that Japanese shares simply because they're printing money every day and purchasing ETFs. The Bank of Japan has more money than he does. If they're purchasing ETFs, he is buying Japanese ETFs. Whenever there is an issue, people look for a theory. Mr. Marx had a great theory. Marxism is a social, political, and economic ideology originated by Karl Marx that focuses on the battle between capitalists and the working class. Marx claimed that the power connections between capitalists and workers were fundamentally exploitative and would inevitably cause class conflict, and we all know that a lot of people tried it for a long time. But now, nobody wants to be Marxist anymore. But Mr. Rogers agreed that it was a brilliant theory. Here's one hypothesis that is called MMT. It is named More Money Today. And everybody loves it and seems to find it a great theory, and people are becoming acclimated to attempting to adopt that theory. Marxism, for example, was a free lunch for everybody, but it didn't work. And this notion is dubbed MMT, or More Money Today, as the term looks to be an easy method and people love easy answers. The United States government has made it legal for the central bank and the Federal Reserve to buy other assets. But when things become really bad, they're going to do everything they can to save themselves. They don't care about Mr. Rogers' kids or your kids, but all they worry about is the next election, and the way they do that is if they have to flood the money. They will all buy a BM or Ford or whatever they need to buy. Mr. Rogers, that is a simple way. Mr. Rogers looked around the world and he knew that in 2008, they had a problem in the world because of too much debt. As he read the same newspapers, we can deduce from there that since 2008, debt all around the world has soared. So he persists in saying to himself, well, the next time we have an issue, it's going to be the worst in my lifetime. He mentioned so since the debt is so much worse in 2008 for him, that's just a simple statement, simple observation, like they know that they're going to have horrible blizzards. Look at what happened in Texas, for example. When Mr. Rogers claimed that the next bear market is going to be the worst in his lifetime, he is referring back to what he knew happened in 2008. There is a saying in the commodity sector and he believes that it should be applied in all businesses. It is knowing that the cure for high prices is high prices because high prices cut demand and bring in supply. That's what happened in the other part of the statement, that the cure for low prices is low prices. If prices are low for a long time, people are going to buy more and stop producing. To explain it any further, these cycles have been going on for hundreds of years, certainly, and maybe thousands, and that's going to continue. Has it been going up? We had a high price of oil and falling reserves. We are declining everywhere, and still, new technologies come along. And for a while, if you could spell fracking, people would give you money and a bubble built, and if we see that, we all recognize to ourselves, wait, we need to generate money because these people need to pay their loans for. The fracking bubble broke and burst, as all bubbles do. Now some known reserves of oil and are still continuing to drop except for fracking, and that is not a bubble anymore. And if we're speaking primarily about commodities, we had a massive boom. Oil moved from nothing to $150 per barrel. We had booms, and that could happen with many commodities. Since then, numerous commodities soared and fell. Bonds are in a bubble all over the world, property in many areas, for example, as we look in Seoul, Korea. He just can't believe what a bubble there is in property in Seoul. So many stocks are beginning to build bubbles. Commodities are the only asset type that for Mr. Rogers is still the cheapest. That is still down 45% from its all-time high. Sugars fall maybe 70 or 80% from its all-time high. Oils, on the other hand, are down over 50% from their all-time high. Therefore, a commodity is the only asset class that Mr. Rogers can state that is inexpensive. Mr. Rogers even emphasized that the fundamentals are changing. You may observe it since more people in America studies public relations and study courses on agriculture presently. Obviously, if the world changes, you have to change with the world. Energy is still the most significant commodity. Nearly all energy comes from oil and natural gas, which may be changing. The demand for oil may go down, but the need for copper is going to grow up as lead and lithium and other things. There's going to be more inflation. We know it's here, and items like silver and gold have always been a means to protect oneself against inflation. He doesn't think that the exuberance is done, but all of these guys continue to print money, and what will happen when things get bad? When the markets go down for a while, they will panic, and they will print more money. When things start being solved or going down, they will print more money and will have a great rally that will probably be the last rally. No one can know. It's always led to an asset bubble throughout history. Why is that a concern? Because when things get excessively overpriced, a lot of new people come rushing into markets, inexperienced people get thrilled and joyful. And then when the bubble falls, and it always pops, and a lot of people will lose a lot of money. We aim to be not part of that. Mr. Rogers believes that it's going to pop someday. He knows a lot of people are going to suffer, and all we could hope is they will never be part of them. If we can look back at markets any place, in the laboratory phase, whether it's the last 6 months or the last few months of a year, some really weird things have happened. You look back at the end of the 90s, the Nasdaq doubled in 6 months in the end, and it's always that way. People get very excited and they see things going up. They don't want to miss it, they want to jump in, and you have really wild, crazy moves. In America, we sometimes term it a blow-off. The market blasts off. It goes up so far and so rapidly. That's why we could expect it is going to happen again. It has often happened in markets, and it can probably happen again when they start printing money again. Because then we see that when things become bad and the central bank comes galloping in and prints more money, everybody says, we don't ever have to fear because the central bank will protect us, and that's when people start to get anxious. In investing, you have to think long term. You should invest in stocks that you want to own for the long run, and don't sell them simply because their prices went down in a bear market, and you should focus on quality. Those are some thoughts one should also be put in mind when investing.